Today on SportsEpreneur, we're looking at how Robinhood is changing the way people engage with sports betting. Instead of using a traditional sportsbook, they've created a system that looks and feels like stock trading. And it's already drawing lawsuits from states, pushback from the NFL, criticism from the NCAA, and attention from regulators across the country. Here's how it works. Robinhood partnered with Kalshi, a federally regulated exchange, to launch what they call prediction markets. These let users trade contracts based on the outcome of games. Prices move throughout the contest, and users can buy or sell at any time. Robinhood insists these are financial derivatives, not gambling, and that distinction is central to their approach. Compare that to DraftKings and FanDuel. Those companies spent years and billions of dollars fighting through state-by-state licensing. Robinhood avoided that process by working under federal oversight instead of state gambling laws. The result is a product that's available nationwide, even in places where sportsbooks remain illegal. Here's an example. Say you think the Kansas City Chiefs will beat the Buffalo Bills. You might buy a contract for 65 cents. If the Chiefs win, you receive $1. If they lose, the contract is worth nothing. But unlike a traditional bet, you don't have to wait until the game ends. If the price rises during the game, say from 65 cents to 78 cents, you can sell and lock in a profit right then. It functions more like trading than betting, and that's the angle Robinhood is emphasizing. The numbers show just how significant this is. Since the end of 2024, Robinhood has processed more than 2 billion contracts. Sports make up a large share of that, fueling about $1 billion in quarterly trading volume. Robinhood charges only 2 cents per contract, but at this scale, the revenue adds up quickly. And with markets open 21 hours a day, covering every NFL game and major college matchup, the reach is far beyond what most regulators have seen before. That's why the opposition is so strong. Nevada and New Jersey say Robinhood is breaking gambling laws. Robinhood has responded with lawsuits of its own, claiming federal oversight preempts state authority. Massachusetts regulators have subpoenaed the company over its March Madness markets. The NFL has prohibited all league personnel from using the platform. And the NCAA says these markets pose direct risk to student athletes and game integrity. Research shows that 3 out of 4 college students already gamble, and some even use financial aid money to do it. Critics argue that Robinhood's system doesn't reduce the risk, it expands it. Tribal gaming groups have also taken action, saying platforms like this undermine long-standing agreements between tribes and states. Consumer advocates point to the nonstop nature of trading, warning that it could worsen gambling addiction. Instead of one bet placed before a game, this system allows continuous trading for hours at a time. And this goes beyond sports. Robinhood is already offering prediction markets on politics, cryptocurrency, and cultural events. Sports are simply the most visible. If courts side with Robinhood, the decision could set precedent across industries, allowing more companies to bypass state regulations. If courts reject it, Robinhood will be forced to follow the same licensing rules as other sports books. Competitors are paying attention. FanDuel has partnered with the CME Group to create event-based contracts of its own. DraftKings is exploring acquisitions in the prediction market space, but they remain tied to the state license model that Robinhood is challenging. So, right now, millions of people can trade on sports outcomes through Robinhood. The company calls it legal and federally regulated. States, leagues, tribes, and advocates call it gambling under another name. Courts will determine which side is correct. That's Robinhood's prediction market strategy. It's bold, it's controversial, and it's unfolding in real time. Whether it reshapes sports betting or collapses under regulation, the outcome will set the tone for how finance and sports overlap in the years ahead. Thanks for watching. For more stories where sports and business connect, subscribe to Quiet Loud Studios and check out SportsEpreneur.com.